have you been? Hope you've had a lovely time all this while. Yeah, we'll have a question under the cash budgeting. So we are going to solve this question today, and I will try as much as I can to simplify this in the way you are going to understand that whatever kind of question you meet under the cash budget, you give it a shot. So you do one thing for me now. Copy out those questions because I'm going to rub off the board while we present the solutions for the inflow sales budget, the outflow cash schedule collection, and so on and so forth. So do yourself that favor, pause this video, copy out the question, then we'll continue with the solution. I hope you are done with it. We need to have this table, which is the inflow cash schedule collection and the outflow purchases schedule collection. Okay, so take note of these two tables. It is very, very important. All right, so when we go back to the question, the second question says the cash book balance as at 31st of June 2006 is expected to be 95,000 naira. Now underline the word the cash book balance. That means it is the balance of the cash book, which simply means it will be the last transaction we are going to treat. So asterisk that while we proceed to the next question. The next question says 40% of sales is by cash, while the remainder is by credit, which is received 3 months after sales. 3 months after sales. What it simply means that the transaction that was paid in May was the transaction that was carried out in May. 40% of the cash was paid and 60% being the remainder was not paid. All right, it was a credit sales. So when we see cash, it means a transaction that was carried out with the payments being made instantly. And when we see credit, it means a transaction that was carried out but the payment was made in a later time. So what we do is this. It says 40% of sales is by cash. That is the reason why we have cash sales 40%. So if 40% is by cash, it simply means that the remainder is 60%. So the credit sales is 60%. Now to answer the question, what we do is this. 40% of sales is by cash, while the remainder is by credit, which is received 3 months after sales. So this is when the transaction took place, and the payment was made 3 months after. So 3 months after, this is May is off 1 month, June the 2nd month, and July the 3rd month. So it simply means that the transaction started in August. All right, 90,000. Now the way we answer this question is this. What we are going to do is the 40% of sales of 100,000. So let us proceed. 40% of sales. It is just a plain transaction. That of the 3 months calculation has to do with when we come to the credit, because we were told that the payment was made 3 months after. So the 40% of 100,000 is what? 40,000. So in May we have 40,000. 40,000, which is 40 divided by 100 times 100,000. It gives you 40,000. You take the same step, 40% of 120,000, and that gives us 48,000. In July, 40% of 110,000, that gives us 44,000. You follow the same process. In August, we have what? 36,000. In September, we have 56,000. In October, we have 52,000. In November, we have 60,000. In December, we have 32,000. In January 2007, we have 28,000. And in February, we have 24,000. So let me repeat it. Cash sales, all right? 40% of sales is by cash. It's by cash. While the remainder is on credit, which is received 3 months after sales. That means when we come to treat the 60%, it will be treated from 3 months when the payment was made. Okay, so we are done with this. 40% of 100,000 gave us this transaction. 40% of 120 gave us this figure. You continue that way. Meanwhile, take note of this. This is the cash area, while this is for purchases. So it simply means that as we are treating the inflow sales schedule collection, all the figures we need, we'll get it from this section, which is the cash section, the sales section rather. So we are done with that. Credit sales now. Remember, it says credit, which is received 3 months after sales. This is question number 3 now, right? Credit, which is received 3 months after sales. So remember, the transaction took place in May, and we were told that he received the money 3 months. So May is off, June is off, July is off. So the payment was made when? In August. So what it simply means that May is off, June is off, July is off. 1, 2, 3. 3 months after sales. Now, there is something you need to take note of. Remember, the transaction was carried in May, all right? And the payment was 100,000, isn't it? But they paid 3 months after. So, we are going to calculate the 60% of 100,000 and we'll record it in August because the transaction took place in May, but the payment was made in August. Understand the concept? The transaction took place in May, but the payment was made in August, which is the 3 months after sales. So it is the cost of that transaction in May that we'll calculate, then we'll record it in August when he made the payment. So 60% of 100,000 will be recorded under August. So that is 60 divided by 100 times 100,000 is equal to what? 60,000. In September, we'll have 72,000. In October, we have 66,000. In November, we have 54,000. In December, we have 84,000. In January, we have 78,000. And in February, we have 90,000. So, let me repeat it one more time. Since the cash sales was 40% and the credit sales was 60%, and we are told that the 60% was paid 3 months after sales. So, 1, 2, 3 months is off. 3 months after sales is in August. Because the payment or the worth of that goods was 100,000 in May, and the payment was made in August. So we are going to calculate using this particular value, when the transaction took place, the cost of that transaction, which is 100,000. Then we'll record it in August when the payment was made. So once you are done with this interpretation, the next thing you do is to get the total, okay? Now to get the total, in May, we have 40,000. So this is the total sales now. In June, we have 48,000. In July, we have 44,000. In August, we have 96,000. In September, we have 128,000. In October, we have 118,000. In November, we have 114,000. In December, we have 116,000. In January, we have 106,000. And in February, we have 114,000. So, we are done with the inflow sales schedule collection, all right? Now let us go to the next one, which is the outflow purchases. Since we are dealing with the outflow, our transactions or our figures will be collected from this value, this column. So let us proceed. That is question number 4. Question number 4. It says 50% of purchases is by cash, while the remainder is on credit. The credit purchases is paid 2 months after the purchases. So let us trade the first one, which is the cash purchases. Cash purchases, and we are told it's 50%. If 50% is the cash purchases, it simply means that the remainder is 50%. That is why we have 50% here and 50%. So for the cash sales purchases, we have 50% of purchases by cash. So the 50% of 60,000. 50% of 60,000, that gives us what? 30,000. So in May we have 30,000. In June we have 35,000. In July we have 32,500. In August we have 24,000. In September we have 41,000. In October we have 40,000. In November we have 46,500. In December we have 25,000. In January we have 20,000. And in February we have 15,000. 15,000. So I repeat it one more time. Cash purchases 50,000. Sorry, 50%. So the 50% of 60,000. 50 divided by 100 times 60,000. That is for May, and we recorded it under May, 30,000. 50% of 70,000 is 35. 50% of 65,000 is 32,500. So you continue that process until you get to February. So credit purchases. Now, if the cash purchases was 50,000, it simply means that the credit purchases is 50,000. Let us read on the question number 4. While the remainder is on credit, the remainder is 50%. The credit purchases is paid 2 months after purchases. 2 months after the purchases. So, just like what we did on the first section, but here it says 2 months after. So, May is off, June is off, which means the payment was made in July, all right? The payment started from July. So, 50% of 65,000. So when we come to May, off, we come to June, off. Remember, 2 months after. So, in July, we have 30,000. In August, we have 35,000. In September, we have 32,500. In October, we have 24,000. In November, we have 41,000. In December, we have 40,000. In January, we have 46,500. And in February, we have 25,000. Now that we are done with this, let me repeat it one more time. Credit purchases 50%. So the 50% of 60,000 was recorded in July because we were told that the payment was made 2 months after. So we'll continue the process. Now the total purchases. We have 30,000 here. We have 35,000. This is the summation. The summation is what we're doing here. Here we have 62,500. 62,500. Here we have what? 59,000. The next one we have 73,500. 73,500. And the next month we have 64,000. In November we have 87,500. In December we have 65,000. Remember, we're adding it up. In January, we have 66,500. And in February, we have 40,000. 40,000. So, with what we've done here, we've treated question number 3 and question number 4, which is the sales schedule collection and the purchases schedule collection. So we'll move over to the main cash budget itself. So, what the value we got as our total sales and our total purchases. So those values, we're going to bring it out now. So we'll have our total sales here. Total sales. So the summation of the credit purchase and the credit sales and the cash sales will now be reading out in their respective months. But before I proceed, there is something we call the month of significance. Remember, on the question, when you read back, it tells us under the requirement, it says, prepare the cash budget on monthly basis and in total for the half year ending 31st December 2006. Okay, so that half year ending is our month of significance. You need to take note of that. You watch, on the table we have, it starts from July, August, September, October, November, December. Unlike the previous table where we brought out the cash purchases and the credit purchases, the cash sales and the credit sales. Now, we actually treated everything we have on the cash schedule collection, but in the main budget, we'll make use of the month of significance, okay, which is what we are required to answer or to solve for. That is the reason why it is titled, the name of the account, XYZ Limited, as we have in the question, then cash budget for the half year ending. So this is our month of significance from the question, half year ending, 31st what? December. Okay, now let me give us a clue on how to get this. Now let's go back to the question. We have May, June, July, August, September, October, November, December, January and February. And from the question here, it says half year ending 31st December. Half year has to do with what? 6 months. 6 months. So what we'll do here, since this is December, and so we have here December 2006. To get the half year, you start with December, which is 1, 2, 3, 4, 5, 6. It stops here. So which is to tell you that from July to December is our month of significance. So we'll no longer make use of May, June, and we'll no longer need January and February. Okay? Let me repeat it one more time. The month of significance, it is always given in the question. Like you can see, we are required to prepare the cash budget on monthly basis and in total for the half year ending 31st. So the half year has to do with what? 6 months. And the month they gave us there was what? In December. So 6 months before December was from December, November, October, September, August, and July, which is 1, 2, 3, 4, 5, 6. If they told us half year ending June, all right, then you start from June and you count to 6 months. So if it were to be half year ending in June, okay, this can be June. If in other questions they tell you half year ending June, you start from June, you go up until you get to the 6 months. Then you have to know that that particular month till that June, it's your month of significance. So let us proceed. Our total sales. From the previous one we solved, remember, when we total the account, what we have there was, in July, we have what? 44,000. In July, we had 44,000. Look back at the question. In July, we have what? 44,000. In August, we have 96,000. In September, we have 128,000. In October, we have 118,000. In November, we have 114,000. And in December, we have 116,000. Go back to the question when we solved under the schedule collection. The total sales we had then, when we added the credits, the cash sales and the credit sales. This was the total we had in July, in August, in September, October, November. So in this main cash budget, we are going to add up everything we have here, 44,000 plus 96,000 plus 128,000 plus 118, 114, and 116. It gives us a total of 616,000. 616,000. Now, if we also go through the question, we realize that this was only the cash sales or the total sales transaction we had. So, we are done with this. Now, let's come over to payments. Meanwhile, go through the question one more time. You find out that we have more of payments than more of the sales, okay? So, let us proceed. Under the total payments now, the total payments from what we calculated when we solved the credit purchases and the cash purchases. So, the total purchases now, total purchase. So, in July, we had what? 62,500. 62,500. In August, we had 59,000. In September, we had 73,500. In October, we had 64,000. In November, we had 87,500. And in December, we have 65,000. We had 65,000. So the summation of the purchases, the total purchases we had, is 411,500. Okay? So remember the process. These are the total which we have on the schedule collection that we treated before the cash itself. So let us move over to question number 5. Question number 5 says salary is 15,000 per month and paid promptly. Salary is 15,000 per month and paid promptly. It simply means that the salary of the workers are 15,000 and it was paid promptly. So when we come under the payments here, we have what? The salary. And we were told it's 15,000 naira and it was paid promptly. It simply means in all the months, it was a fixed price of 15,000. So we have 15,000 here in July. In August, we have 15,000. In September, we have 15,000. In October, we have 15,000. In November, we have 15,000. And in December, we have 15,000. So we add up everything we have here, it gives us what? 90,000 naira. 90,000 naira. So we go to the question number 6. Question number 6 says, the company intends to acquire a factory costing 1.2 million naira on the 1st of October 2005 to be paid at equal installment of 12 months starting from the date of acquisition. Now, take note of it. Underline the word, the cost of the factory, which is 1.2 million. You take note of the date of acquisition, and it told us that they will make equal installment payments of 12 months. Okay? 12 months. So, what we're going to do is this. Now, to treat this question, it says that the company wants to produce a factory, okay? A factory worth 1.2 million. So we have what? 1.2 million, all right? This is 1.2 million, isn't it? 1.2 million. And we were told that they are going to make equal installment of 12 months. So we need to know how much they are going to pay per month. In order to identify that, we're going to divide this value by 12. Now, if you punch your calculator, this gives us what? 100,000 naira. So it simply means that they are going to pay 100,000 naira, 100,000 naira for 12 months. Okay? 100,000 for 12 months. Now, the next thing you do is to take note of the month of acquisition, or the date of acquisition rather. So we are told that the date of acquisition is on the 1st of October. 1st of October 2005. Take a look at the dates we've been working on, 2006. And we were told that the payment or the date of acquisition is in 2005 October. So, watch this illustration. We have October 2005, we have November, we have December, we have January, we have February, we have March, we have April, we have May, we have June, we have July, we have August. Remember they said 12 months. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Then September 12. So 2005, November 2005, December 2005, January 2006, February 2006, March 2006, April 2006, May 2006, July 2006, 2006, 2006, and 2006. Remember they said that the date of acquisition is in October and the payment to be made instead of equal installment of 12 months. So we have 12 months being represented here, right? So our month of significance from this question started in July 2006. It simply means that in October 2005 that the company has paid 100,000. In November they have paid 100,000, 2005. In December 2005 they have paid 100,000. In January 2006 they have paid 100,000. Remember, our month of significance starts in July. In February 2006 they have paid, March 2006 they have paid, August, April 2006 they have paid, May 2006 they have paid. Our month of significance is when? In July. June 2006 they have paid. Now, July, we have July 2006, and that is exactly the transaction which we are recording now. So it simply means they have not paid in July, they have not paid in August, they have not paid in September. So since the question now told us that it is made on equal installments, it simply means that on this year, in 2006, in this month, 2006, that these payments were carried out. So what it simply means that in July, they finally paid the 100,000. In August, they paid 100,000. And in September 2006, they paid 100,000. Now, these months are reflecting in the cash book. So what we do is, in July we record 100,000. In August, we record 100,000. And in September, we record 100,000. In October, that was last year when the payment was made. So they have, when they made the purchases, so they have made the payments. In November last year, they have paid. In December last year, they have paid. So the summation of these three values gives us 300,000. Okay? 300,000. So remember, it's a purchase of what? A factory. Okay? The purchase of factory. Hope you understand this illustration. You can rewind the video a bit and understand this concept very well. Okay? So let us go to the next question, which is the last question, the question number 7. And question number 7 says that sales commission is 6%. Sales commission is 6%, okay? And paid 2 months after sales. 2 months after sales. Remember, our month of significance started in July, right? But the cash collection itself started in May. And we were told that the 6% was paid when? 2 months after. So since this is May, and we were told it is 2 months after, it means May and June. The payments, the 6% commission, you started making the payments in July. Okay? So let's read it one more time. Sales commission is 6% of sales. This is sales now, remember. This is sales. 6% of sales, and paid 2 months after. 1 month, 2 months after. Okay? So from July. So what we're going to do, just like when we treated the cash collection then, we're going to say the 6% of 100,000, and it will be recorded in July. The 6% of June, 120,000, will be recorded in August. So it goes this way. For July, which we have here, we have what? The sales commission. Sales commission. So in July, we are going to have the 6% of the sales in June. So 6%, all right? This is July. 6% of 100,000 is what? 6,000, and it's going to be recorded in July. So 6% of 100,000 will be recorded in July as 6,000. 6% of June, 6% of June, the next month we're going to have what? 7,200. And the next month we are going to have 6,600. 6,600. In October, we are going to have 5,400. In November, we are going to have 8,400. And in December, we are going to have 7,800. Now, the summation of these values of this commission we have gives us 41,400. So, let me repeat it one more time. 6% of sales, 6% of sales, and paid 2 months after sales. Our months from the schedule started from May, okay? And we are told that the payment was made 2 months after. 2 months after, 1 month, 2 months. So it started in June, in July. So the 6% of this 100,000 will be recorded in July. The 6% of June will be recorded in August. The 6% of July will be recorded in September. 6% of August will be just that way, okay? So this is the entry we have here. Now, when we go through the question, we'll find out that this seventh one is the last thing we are told to solve. Now, the next thing we'll consider now is to get our total payments. Remember, this is the sales revenue, and this is for the payments. This sales revenue is also known as the segment A of the budgeting cash book. This is also known as the segment B. Remember, the purchases or the cash budget rather is being divided into the segment A and the segment B. Segment A has to do with the inflow, the sales, while segment B has to do with the payments and the outflow, which are expenses or expenditures. Now we are done with this, let us get the total. Remember, this is the total of the segment A, all right? So let us get this total. We need to get our value. So the summation of everything here gives us what? Let us do it this way. So we have our total payments. We can extend it here for clarity so we understand what we're doing. So this is what? Total payments. Total payments. Now our total payment has to do with what? 62,500 plus 15,000 plus 100,000 and plus 6,000. It gives us 183,500. 59,000 plus 15,000 plus 100,000 and plus 7,200 gives us 181,200. In September, we have 195,500. 100 rather, sorry. In October, we have 84,400. In November, we have 110,900. And in December, we have 87,800. Now, the summation of these four values which we have here gives us 842,900. 411,500, 90, 30,000, 300,000, and 41,400 gives us this. Okay? Now, the next thing we are going to consider here is the net profits. The net profit. So it goes this way. Net profits. Now, how do we determine our net profits? We say the segment A minus the segment B. Okay? So this is the total we have here. Alright? That is the total of how much? 44,000. Alright? So we're going to say 44,000 minus 183,500. 183,500. So once we subtract these two values, remember, segment A minus segment B. Alright? Segment A minus segment B. segment A minus segment B. All right, we'll continue that way. Okay, so 44,000 minus 183,000 gives us 139,500. Not just 139,500, but minus 139,500. That is why it is represented in brackets. That is the reason why it is represented in brackets. So let us proceed. Let us proceed. Now, the next thing we do is 96,000 minus 181,200, and it gives us minus 85,000 minus 85,200. We'll come over to the next one. 128,000 minus 195,100. It gives us minus 67,100. We'll come over to the next one. It gives us 118,000 minus 84,400. It gives us 33,600. 114,000 minus 110,000 gives us 3,100. 116,000 minus 87,800 gives us 28,200. 616,000 minus 842,900 gives us minus 226,900. Okay, so now that we are done with the net profits, we have identified what the net profit is. The next thing we'll consider now is the opening balance. Remember, question number 2. Let us go back to the question. It says the cash book balance as at 31st of June 2006 is expected to be 95,000. So what we do is this. We now consider that value. So we are going to treat it. And what we do, we have the opening balance. Opening balance. Opening balance. So, how much is it? 95,000. 95,000. Now, the opening balance is being added. All right? The opening balance is being added. Take note of that. The opening balance is being added. It is not subtracted. The opening balance is being added. So, let us proceed. So, what we're going to do is this. Now we're going to determine our opening balance and the closing balance. This is the opening balance, and below we have the closing balance. The closing balance. So, take note of the steps. Remember, the bracket sign simply means it is a minus sign, okay? So we say minus 139,500 plus 95,000 minus 139,500 plus 95,000. So it gives us a total of what? Minus 44,500. Now there's a system, there's a way this question goes. That is the way we treat the opening and the closing balance. So what we are going to do is this. Minus 139,500 plus 95,000. It gave us what? Minus 44,500. This closing balance we have here comes over to the next month. It comes over to the next month as the opening balance. So we have what? Minus 44,500. So what do we do now? Minus 85,200 plus minus 44,500. Remember I told us that the opening balance will be added. But looking at the transaction or the entry from this budget, we already have a minus sign. So we can't show you the way, okay? So the best way for you to understand what is happening now is exactly what I'm explaining. Because if I have to tell you that plus minus is minus, this and that and so on, you might get confused. So do it this way. Minus 85,200 because of this bracket sign, then plus minus 44,500, okay? So when you do that, this particular transaction gives us what? Minus 129,700, okay? So we'll come over to the next one. This closing balance comes over to the next month, okay? So it is what? Minus 129,700. So you follow the same step. Because of the bracket sign, you say minus 67,100 plus minus 129,700 plus minus 129,700. So it gives us what? Minus 196,800. So this closing balance comes over to the next month, okay? So we have what? Minus 196,800. Now when we come over to this place, you can see this is a positive value. It doesn't have a bracket, so it's a positive value. So you say 33,600 plus, because of this negative, the bracket sign, we'll now say minus 196,800. So punch your calculator, 33,600 plus minus 196,800. Okay? It gives us minus what? 163,200. This closing balance comes over to the next transaction. So we have minus 163,200. So what we do is 33,100 plus minus 163,200. Okay? So that gives us what? Minus 160,100. This transaction comes over to the next one. So we have minus 160,100. Now, 28,200 plus minus 160,100. It gives us what? Minus 131,900. So take note, this is in December, right? This is in December and this is the final total. So the way we brought this closing balance to the next month, the closing balance to the next month stops here. Okay? You don't carry it on to the total. What you do here is to bring back this value, this opening balance. You bring back this opening balance to the grand total. So what we have here is what? 95,000, which was given from the question as the opening balance. So what you do, you now say the minus 226,900 plus 95,000, and it gives us what? Minus 131,900. You can see that these two values are the same. So this is exactly how to treat a practical question or problem under the cash budget. I will advise you to study, have this video in your phone and watch as many times as possible. Meanwhile, visit our website through the link below and you download a free format which I have made available for you to practice, to use in attempting any question you see under the cash budget. It is well explanatory and it is very, very easy to understand. So if you like this video, if you love what we just did, share this video, like this video, and meanwhile, we'd like you to subscribe to our channel and invite more friends to join and participate in this online learning system. Do have a good day. If you have questions or you need clarification, you leave a question below, just leave a comment below and we will definitely get back to you. Thank you and do have a blessed day. Goodbye.